We recently received a new reading on the University of Michigan Consumer Sentiment Index, and it dropped sharply to 50.3, marking the second lowest reading in recorded history. That's a striking indicator about the state of the American consumer and reflects what many have been describing as a K-shaped economy. On one side, we have asset markets like the S&P 500 and NASDAQ hitting or hovering near all-time highs. The Russell 2000, which tracks smaller publicly traded companies, is also mostly near its highs. Yet the average American consumer is struggling, reporting some of the lowest levels of optimism about their current financial situation and their outlook for the future. Another metric worth noting is the University of Michigan Financial Conditions Index, which also sits near all-time lows. When comparing these measures of consumer sentiment and financial conditions with a broad small cap index like the Russell 2000, a fascinating long-term relationship emerges. The Russell 2000 is composed of smaller, more domestically focused companies, unlike the S&P 500 and NASDAQ, which are increasingly dominated by a handful of mega-cap technology firms. In recent years, the performance of these larger indexes has become heavily dependent on a few names like Nvidia, Google, and the other members of the Mag 7, which means those benchmarks can rise even when most of the economy is not. When you look back to 1987 and line up the University of Michigan Consumer Sentiment Index with the Russell 2000, the timing of their lows aligns remarkably well. These troughs marked key turning points, including the 1987 crash, the post-dot-com bust, the aftermath of the 2008 financial crisis, the COVID bottom in 2020, and the 2022 market low. Even the brief tariff-driven slowdown earlier this year followed a similar pattern. Historically, whenever consumer sentiment bottoms, it has preceded renewed economic expansion and improving market conditions for smaller companies in Main Street America. This is especially important when considering Bitcoin. Each time the Russell 2000 has broken out following a bottom in sentiment, Bitcoin has historically entered one of its parabolic bull runs. The relationship suggests that when credit expands, liquidity increases, and optimism returns to the real economy. That same monetary expansion has fueled Bitcoin's explosive growth phases. With consumer sentiment once again near historic lows, the Russell 2000 on the verge of breaking out, and the next wave of monetary and credit expansion seemingly inevitable, history may be setting the stage for another major Bitcoin bull market. That's why I wanted to share this perspective today. Watching the University of Michigan Consumer Sentiment Index alongside the Russell 2000 provides a window into the mood of Main Street America. When confidence returns and small caps begin to outperform, it could mark the beginning of the next great expansion in both the real economy and Bitcoin. Thanks for watching, everyone, and see you next time.